Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, July 22nd, 2008. Well, it was the third day of consolidation well underway this morning and through about early afternoon, and then something took place that was very interesting in particular. We saw the markets get a bid and start to rally, and they rallied for the last hour and a half or so of the day. And this is very, very interesting because we're going to start to look at the technicals on the charts and see how this is setting up for a possible move, and is this telling us something about a future move coming here, or more consolidation, or a pullback. And we're going to look across the charts and look at the various news releases that came out over the course of the day and yesterday and kind of decide what was going on. Now, yesterday after hours, we talked about the two consolidation days, yesterday and Friday, that took place in this market. And that was pure expected. I mean, that was to a T expected. Anytime you have a move like last week, especially when the financials just rocket up like they were doing and oil comes down as hard as it was doing, you're going to need a little bit of a pause in the market to catch its breath. Now, we saw Friday consolidation, we saw Monday consolidation, and today was a good consolidation day and continuing in the consolidation pattern until late afternoon. And we're going to show you what happened on the charts here because it was a blast-off effect of proportion, of massive proportions. And what you're seeing here basically is the market trending down. It got a little bit of a bid and just trading around the flat line. And this is the flat line of the market pretty much. All right, again, we're looking at the futures chart, the ESU8 September '08 E-Mini S&P 500 contract here. And what you're seeing down here is the market trading down. Now, why was the market trading down prior to the open? Well, you had Apple, and you had Texas Instruments, and you had American Express, all disappointing on earnings, all getting slammed last night like nothing else. Unbelievably drops yesterday after market, and also this morning in pre-market and into the market open. Now, Apple, a beautiful move up, and we're going to show you these charts because these stocks came back dramatically from their lows. Apple was down in the 144, 145, 146 area after hours yesterday and this morning, and it only closed down $4.50, or about $4.25 to 162, which was only down fractionally on the day. And this is the amazing thing about this rally. And you can see it kick off right here. And what time? 2:30, guys. And what does 2:30 coincide with? The USO, the oil contract closing, and we'll show you the USO. How did it end today? But off substantially again after a little bit of a bounce up yesterday on concerns about a storm in the Gulf of Mexico. Now, that storm was basically discounted as of today, and in tune with that, oil began to drop again, and oil has just been clobbered. You saw the massive drop here, you saw a pause day, and now another drop in oil today. Oil trading down over $3 a barrel today to the 128 range, really coinciding right with the lows of 2 days ago. And that's the interesting thing. The close on it was really the lows of 2 days ago, which you can see in this chart. And that's going to be an interesting area to watch. So you want to watch the 103 to 102 level on the USO. And this is the oil fund. And if you get a break below 102, look for 100 as being the next key support on the USO. That should be solid support. I love a pierce of that even number and then a bounce back over 100, and we'll have to keep a close eye. But anyway you cut it, start to look for oil to actually get a little bit of a bounce coming in possibly, or it may want to test that 100 mark and then get that bounce. I'd be a buyer of the USO for a short-term, very scalp trade play if it pierced 100 to the downside. So we'll continue to look at that. The UNG, which is the natural gas fund, got clobbered early today. Look at this fall on this. All right, and this is going back, guys, and I just want to point this out. On the USO up in this area, and this is the UNG, which is the natural gas fund, but the USO, we'll flip back to that chart as well. In this area, you got oil trading at $145 to $147 a barrel, and everyone out there is calling for $150. And here in themoneystocks.com is raising its hand and saying, guys, we think this market is coming down, we think it's overbought, and everyone else is telling us, well, supply and demand, supply and demand, supply and demand. No. Long story short, you can see the drop that oil's had. The UNG is even more dramatic. I mean, this thing was trading at $64 up here. Now it hit a low today of $46. That's huge percentage-wise, especially for a commodity-based ETF or fund. Unbelievable fall. And notice where it's hitting, guys. And this is almost a beautiful chart here on the UNG. You're hitting the 200 moving average on the daily. That's going to be very, very good support. And I do happen to favor this. If it retests this tomorrow and maybe pierces that 200, I do favor it for a little bit of a bounce on the UNG. So we'll keep a watch of this, folks, and continue to watch. But let's go back to the futures chart and continue to look at what was happening on the intraday charts. So here the market's trading down on Apple, Texas Instruments, AXP, the American Express, ugly news. And then you get a little bit of a bounce back effect as oil starts to cascade lower. And the market's kind of trend sideways most of the afternoon. Oil closes, and oil's substantially down on the day, and bids fly into this market and rally central. You get a bit of a short squeeze, you get a little bit of this, a little bit of that, and the market just takes off to the upside. And all the indexes closed positive today after consolidating for 3/4 of the day, up 135 points on the Dow, up 24.5 on the NASDAQ, and up 17 on the S&P. Really about 1% across the board on all the indexes on the positive side. Now, the question is, many of you will ask, well, you in the MoneyStocks.com called for consolidation. Yes, and that's what we got the last couple days. And then we got this little bit of a rally. Does this mean that we're not going to consolidate anymore and trend higher? Does this mean that we're going to trend lower now? What does this tell us on this move? And we have to turn to the daily charts to really take a look at this. Number one, from psychological level, this rally here is, again, still piercing this 20 moving average. And we're looking at the SPY chart. So we're not out of the woods for consolidation just yet, although today's reversal was exceptionally impressive because of the negative impact of some of these earnings plays. AXP just got slaughtered. Texas Instruments early was slaughtered. Apple was just crushed. And for the market to fight back when these stocks were getting crushed to the flat line and then rally late in the day is significant for the future. But again, you have to look at this market and say, all right, well, you've come this far, and now you're up here in a matter of 1 week, all right? And we can draw a line there, and you can see. All right, and then there's a couple interesting things here that I can't divulge. Those of you that are going to take the webinar will learn about this, but there's a special count involved here and calculation that we will go over in the webinar. And again, that's Saturday, July 26th, 1 p.m. Eastern Time to 5 p.m. Eastern Time. And I do encourage you all to take it this Saturday, as we have a nice little group forming already. And it's just going to be unbelievable. There's going to be something that we're going to show you here on this chart that's going to open doors that you only imagined. And this is part of what we're going to talk about. So, again, having calculated these various things, you still want to look for consolidation in this market as we had a dramatic move up, all right, today in the late day. All right. Now, it doesn't mean the market can't uptick a little bit tomorrow or downtick a little bit, but we prefer to see a consolidation pattern kind of sideways continuing. All right. You had the 2.5 to 3 days right here of sideways action. You got a little bit of a late day pickup here. What you would like to see for a perfect setup is consolidation pullback now continuing after this late day surge. Now, there's a couple other reasons why, and I want to show you the AXP number one. AXP, look at this candle here. It gapped down at this point and rally all the way up to close up here. Huge move up on the AXP off the lows. Apple, same chart. Look at this. Gapping down on the daily right to here, pushing up and closing, filling the gap, which is amazing. The lower portion of yesterday got filled today, and it closed at 162, and that's amazing in and of itself. TXN, the next play, all right? Same thing, all right? Opened, traded as low as this point down here, was able to rally back to close it right here. Not as good a chart as the rest of them by any stretch. And the last one, Wachovia. Wachovia is probably the biggest reason the XLF and the financials rallied today, late in the day, is because this was getting crushed early. And you can see gapping down from this point is where it closed yesterday, gapping down to here, and then off to the races it goes, pulls back and consolidates. Look at this consolidation pattern all day long, middle of the day. This is what we refer to as somewhat of a bullish flag pattern, right above the 20 and 50 moving averages intraday, and then off to the races. But anyway you cut it again, this chart here, you can even look at Wachovia, traded as low as $8, now $16, 100% move in the last week. And that to us tells us as traders, stay away from buying those. In fact, you want to start to wait for a pullback on them of at least a 20, 25 to 30 to 50% retrace of these moves on the financials. Once that happens, and this, trust me guys, they are not out of the woods yet. There is going to be more of them to go under, and it's by far not out of the woods, so don't think it is. You want to be very cautious here on them. But once you get a pullback, then you start to look for a re-entry price. You want to see a pattern form, time frame form, and price formation. And you can put those three together and get a sentiment indicator, and you'll be able to go long. And that's what we do in the swing trade alerts. We look for those keys in the swing trade alerts to go long or short, and that's how we come up with those. In addition, again, the webinar, we go over these calculations. You'll be able to do this for yourself on the charts, and it's amazing. It will open doors like you've never found before. So I do encourage you to go to inthemoneystocks.com and click on webinar, and then sign up for that webinar on Saturday. It will be life-changing in your trading career. I promise that. All right, folks? So that's the interesting thing to note on that Wachovia, but unbelievable rally late in the day. Even though the markets, in all fairness, the markets were not up unbelievably large amount, but it's more the dramatic move here, okay? It's more what happened across the board, how you had a market that with NASDAQ was down as much as 35 points pre-market on the futures and ended the day up 25. Just to fight back when Apple was going against the market and Texas Instruments and SanDisk was getting crushed, and the XLF to reverse as well. Unbelievable, and that should be respected. Have a wonderful day, guys. Look for more consolidation in this market. That's the healthy way to take this. If we go up too fast here, then I'm going to start to get scared that we're going to reverse to the downside. So as we go each day, we'll look at each day of the piece of the puzzle, and if we continue up, then we're going to look for a stronger hard pullback and a possible retest of the lows. If we consolidate here, it bodes well for a future move. Take care, guys.